Hey guys, so in our last video, we talked about how staring at the chart always can affect your trading, or how staring at the chart can affect you as a trader. So in this other video, we are going to be talking about how you can form a rule-based system that can actually help you stay away from the chart always. So with that being said, before we get into the video, my name is Daniel. I'm a Forex trader, and in this channel, I talk everything about trading and finance. If you are just seeing me for the first time, you consider subscribing, turning on your notification bell, so when I post videos like this, you'll be the first to get notified to you. So with that being said, let's move straight into the video. Yeah, so guys, before we actually get into breaking down things you need to do to put up your rule-based strategy, you need to know first of all, what kind of trader are you? What kind of trader are you is very important in putting up your rule-based system. So we have four types of trader, which are the scalpers, the day traders, the swing traders, and the position traders. So the scalpers are actually those traders that their time frame is basically from 5 minutes to 1 minute. They just get into the market in less than 2-3 minutes, they are out. So the day traders are traders that actually trade from, they take trade, they open and close a trade in a day. So within a day, they open a trade, then they close that trade within a day. So their time frame is basically from 1 hour, 30 minutes, 15 minutes, and then they're out of the market. And then the swing traders are traders that open and close trade within 2 or 3 days or even a week. So their time frame is always basically from 4 hours, 2 hours, 1 hour, and sometimes 30 minutes. And the position traders, which are the investor kind of trades or traders, those ones, the kind of people that trade that way are the investors. So these ones, they can open their time frame is between, it's always like the highest time frame, like daily, weekly, monthly, even some 3 months. Those ones they have, so daily or monthly, weekly into daily, and 4 hours. So those are the time frame those ones use. So before you can form your rule-based strategy, you need to know which category of trader you fall under. Now, in this particular video, we are going to be using a swing trader, which is I'm going to be sharing my rule-based strategy with you so that you can actually know. Then after I've shared the rule-based strategy with you, I will bring down the point at or the steps at which you need to use in forming your own strategy. In our next video, we are going to be talking about how you can know the kind of trader you are. I mean, the category of trader you fall into. So that's why I said again, you need to turn on your notification bell. It is very important so that you don't miss out all these important details and videos that we are going to be uploading in the channel. So the second thing you need to do before you can form your rule-based strategy is having a clear strategy. I mean, a clean, clear strategy to the market. Now, there's a difference between a strategy and a rule-based system. There are two different things. A strategy is you saying, okay, when I get into the market, first of all, I'm going to the higher time frame, identifying the trend, going down to 2 hours, identifying, marking out on my order flow, all of those things. Then come into a kind of 30 minutes to execute. So that's basically your strategy. Now, the rule-based system is the rules that actually govern you as a trader. I am not trading this day. That is a rule. Okay. When I take a trade, I'm not closing out that trade till it get to its full potential. Potential. That is a rule. So there are two different things entirely. So in this video, we are actually going to be talking about how you can form your own rule-based system. So my own rule-based system in this particular, that I'm going to be sharing with you in this video is very simple. So it starts from Saturday. Every Saturday, what I do is gather fundamentals, look at a currency's interest rate, look at the currency's, employment rate, that country's employment rate, look at every fundamental, uh, uh, stuff I can get in that particular currency. I get it, and then I keep that one side. Now on Sunday, I'm going to be coming back to analyze the chart. Now I'm going to be analyzing the chart to find out how the market is actually responding to the fundamental I've got. Now, after I might have done that on Sunday, on Monday, I actually do nothing. So on Monday, at the close of the Monday market, I come back to the market and I analyze the market again. When I analyze on Sunday, I might have marked out my support or my demand zone, my supply zone, all of that. So on that Monday, what I'm going to be looking for is see how the market have reacted to those points of interest I have marked out previously. So when I do that, the next thing I will do on Tuesday is execute the market. Now I have two types of trading confirmation. The first one is confirmation before entry. Now the second one is confirmation after entry. So my Tuesday execution is going to be confirmation before entry. So I confirm the market before I enter. So when that confirmation is set aside, I execute the market on Tuesday. Now on Wednesday, what I'm doing is look for re-entry. I look for re-entry to the market. Now, if I can find any re-entry, now I execute again on Thursday. On Wednesday. Now on Thursday, I'm going to be taking profit. Is either I close out the whole trade or I take some partials, and that Thursday too is actually an entry day too for me. So is either I close out, I take partials, or I re-enter again. Now, if I see any of those things, I close or re-enter or whatever. On Friday, I do nothing. So Thursday is a day I execute or close up my market. On Tuesday too is a day I execute the market. So I have execution day, I have profit day. Okay, I have analysis day. So keep those points in mind and just keep them somewhere. So on Friday, I do nothing. On Saturday now, I start again, getting my fundamentals in place, reanalyzing the market again to know what the market is about, to do again the next week. So I continue this loop like that, you know. I continue this, loop of having a day where I analyze, having a day where I look into the market actually to know what's going on, having a day where I come to execute, having a day where I come to take profit. So with this kind of rule base I have actually mentioned, you can actually see the steps at which this is actually done. The first thing you need to have is you have a day as a swing trader. Remember, I'm using this as a swing trader. You have a day where you execute. You have a day where you do analysis. If you want to follow it in an order, you have a day where you do your analysis, find all the information you want to get about the market. You have the day where you execute, and you have the day where you take profit. Now compare this to a retail or a day trader. Your own will be, you have a time where you come to analyze the market. You have the time where you come to execute the market. You have the time where you come to take profit, and you have the time where you do your journaling and reviewing that trade. So with these steps I've mentioned for you, you can plan a very good strategy, rule-based strategy that can keep you away from staring at the chart. And well, I will be making another video again. That's why again I need the notification bell to be turned on the I've been doing this video on the components or what makes a good strategy. What are the components you need to have in your strategy that makes that strategy a good strategy? So again, your notification bell needs to be turned on so that when those videos comes out, you'll be the first to get notified. So we've come to the end of this video. If you didn't watch the video where I talk about how trading or watching the chart, looking at the chart always could affect you, I'll be leaving the video up here so you can go and watch the video. So with that being said, you tell me in the comment section what you've learned and how you are going to plan, or how you are going with the rules or with the guideline I've put down in this video, how you are going to be able to form your own rule-based strategy that can keep you away from this harmful habit that can destroy you as a trader. So with that being said, I will see you in this other video. Bye for now.